Hello, everyone, and welcome to today's webinar, Opportunities for Public and Private Finance to Accelerate Growth of the Electric Vehicle Market. My name is Sarah Doherty, and today I wear two hats. I work for the Natural Resources Defense Council, or NRDC, and help to run the Green Bank Network. NRDC is a large U.S.-based but global environmental organization with over 500 full-time staff. Specifically, I work in its Center for Market Innovation that focuses on finance and market-based solutions. For the other hat, NRDC, in partnership with the Coalition for Green Capital, has helped to stand up the Green Bank Network, which is the host of this webinar. The Green Bank Network was founded last year with the aim of increasing knowledge exchange among its Green Bank founding members and with other actors in the green finance sector. The Green Bank Network has a quarterly newsletter that you can subscribe to on greenbanknetwork.org, and you can follow us on Twitter at Green Bank Network. The idea for this webinar came from a conversation among several green bankers in our network. The interest in expanding clean vehicle adoption and the necessary infrastructure was common across many of our members. But with EVs, as you will see, both the technology and the policies surrounding them are moving so quickly that we knew our members and many listeners could benefit from the kinds of information top experts are looking at every day, including the great experts at Bloomberg New Energy Finance and in NRDC's own ranks. Today we are fortunate enough to have from Bloomberg New Energy Finance, Nick Albanese, the Analyst of Advanced Transportation, Yayoi Sakine, Analyst of Energy Smart Technologies, and from here at NRDC, we have Luke Tonishel, Director of the Clean Vehicles and Fuels Project. Their titles do not do them justice. They are top authorities in this field, and I'm very interested to hear what they have to say. In terms of housekeeping, just to remind you, you can submit your written questions through the webinar by typing your questions into the questions box of the control panel. We have a screenshot of what that looks like up on your screen right now. Also, we're recording this webinar, and the recording will be posted on the Green Bank Network website, along with our past webinars. I will now hand it off to Nick to start with an overview of the EV market. The digital floor is yours, Nick.
Sarah, thanks so much for the introduction. So everyone, my name is Nick Albanese. I'm an analyst with the Advanced Transport team here at Bloomberg New Energy Finance, and I'm pleased to be joined by my colleague Yayoi today from the BNEF Energy Smart Technologies team. So before we begin, I'd just like to take this opportunity to thank not only NRDC but also the Green Bank Network for organizing today's discussion and providing us here at BNEF with the opportunity to present some of our latest research. So to provide a bit of context for those of you who don't already know, just moving to the next slide, Bloomberg New Energy Finance, or BNEF, is the clean energy research arm of Bloomberg LP. If we can just move forward 2 slides. So we're a team of 200 experts around the world, and we provide data and research to help decision makers analyze developments across the energy value chain. So looking at everything from wind and solar to power and carbon to storage and transport. So moving to the next slide, for those of you who are interested in learning more, today we just published our New Energy Outlook, and the executive summary of that report will be available on our website. So to kick off today's discussion, before we talk about EV residual values, I'd like to first provide a brief overview of trends in the global EV market. So if we can advance a few slides ahead. So as many of you are, I'm sure, aware, global EV sales, which we measure as including both battery electric vehicles and plug-in electric hybrid vehicles, have increased about 7-fold since 2012, so rising from around 109,000 to over 700,000 in 2016. And most notably, this growth has been global, so we've seen sales dramatically increase not only in the United States and China, but also in Europe. Now moving to the next slide, we think that we can attribute this jump in sales to a number of factors, the first of which has been a drop in battery costs. So since 2010, we've seen battery pack prices fall by 73%, dropping from over 1,000 kilowatt hours in 2012 to $273 per kilowatt hour as of last year. And based on our conversations with manufacturers, we believe that this is a trend that will continue in the coming years. So in addition to falling battery costs, we've also seen a large uptick in the global number of EV charging stations. Moving to the next slide. So in 2016, we saw the number of chargers reach almost 375,000. And EV charging is a topic that Luke is going to speak about later in the presentation. Now, of course, another really important factor in the global EV market has been in the increase in model availability. So a number of companies other than Tesla, of course, now offer battery electric and plug-in hybrid electric vehicles. Now, looking ahead, just going to breeze through these next few slides relatively quickly. We're going to see a dramatic uptick in the number of EVs on the market, particularly battery electric vehicles. So looking as early back as 2008, the only model available in the United States was the Tesla Roadster. Now, just zooming through to 2020, we expect that there will be over 120 battery electric vehicles offered by mass market automakers. And this is really going to open up the market to a number of new segments. Now, most importantly, looking at the next slide, we expect that many of these EVs are going to reach price parity with ICEs between 2025 and 2029. So economics alone are, of course, not going to dictate adoption, but we do note that cheaper vehicles will certainly expand the total addressable market for EVs. Now, moving to the next slide, of course, the growth of the EV market will ultimately depend on a number of policies, so including everything from tax rebates for EV purchases to subsidies for private and public charging infrastructure to fuel economy standards and EV sales targets. Now, just before we dive into this next topic, policy is not the only uncertainty for EVs. Certainly one of the largest concerns, not only for consumers and automakers and governments, has been resale values. So moving 2 slides ahead. So I'd just like to point out, there's been a lot of hyperbole around this topic, but it is true that used electric vehicles retain less value per mile on average than internal combustion engine vehicles. Now, still, there's actually a wide range of models in the segment, and due to the nature of the segmentation in the auto market, we've seen EV depreciation rates varying quite a lot. So as you can see here, while the Nissan Leaf retains less than 40% of its value after about 3 years of use, PHEVs like the Toyota Prius plug-in and the Chevrolet Volt retain about 50% of their value after 3 years, and the Tesla Model S retains nearly 60% of its value even after 4 years of use. So looking at the next slide, you can see that these, there are a number of dynamics tied to customer or automaker and government preferences that sort of explain these depreciation rates. Consumers, for example, are starting to show higher confidence in EV range, safety, and battery life. But at the same time, they're equally aware that EVs, are improving quickly, and they're therefore more inclined to wait for new models rather than to buy older ones, even if they're cheaper. But of course, automakers have also played a role. Because they're primarily interested in new EV sales, car companies are continuing to offer really competitive financing rates and pretty substantial discounts for new leases and purchases of electric vehicles. And this is, of course, depressing the price of used EVs beyond the losses associated with how many of these miles, or how many miles a car has actually driven. So Nissan and Tesla have taken limited action to address low EV resale values, introducing value retention guarantees and offering steep rebates for consumers that choose to purchase their vehicle at the end of a lease. But we haven't seen other automakers really step in here and take action. But actually, we think the governments probably have played the largest role in this, this price disparity here, as tax incentives for EVs have focused almost exclusively on new vehicle sales. And while these incentives have powered the adoption of EVs in established markets, they've also unfortunately put downward pressure on used EV prices. And today, we've only seen California, introduce incentives that have been, specifically targeted to boosting used EV demand. So moving to the next slide, in terms of market structure, it's really important to note that the supply-demand balance of used EVs is overwhelmingly set by the prevalence of leasing among EV drivers. As you can see here, just looking at the U.S. market, the leasing rate for the entire market is around 30% as of the end of 2016, but the majority of new EVs are leased, and we're seeing leasing rates of over 75% for new battery electric vehicles. And these are, numbers that we've seen increasing even in 2017. And this is important for 2 reasons. First, this means that off-lease vehicles are the biggest contributor to the used EV market. So as a result, most used EVs are actually under 3 years old and are still retaining their original manufacturer's warranty. And secondly, this means that the volume of used EVs in the U.S. is expected to grow. So looking at the next slide, we can see that the number of used EVs entering the market in 2017 alone could surpass 75,000, which is, a really substantial number. Now, even with that large number of relatively affordable EVs entering the market, if we move to the next slide, we can see that consumers can still get really good deals on, not only for purchasing new EVs, but also for leasing them. So if you compare the yellow and the green bars here, you can see that leasing a new Nissan Leaf, Chevy Volt, or Toyota Prius plug-in generally makes more sense than buying an older model. So looking at the next slide, another important factor, of course, has been questions about battery life. And here at BNEF, we actually think that this has only really been a matter of perception. So as you can see here, battery degradation has not really been an issue for either the Nissan Leaf or the Tesla Model S. We've seen a few examples of high battery degradation rates, but we think these are mostly anecdotes, and we're not really concerned about widespread technology issues here. So as consumers become more informed about battery stability, we think that this is an issue that will sort of start to fade away. Now, moving ahead, just to focus on the U.S. market in a little more detail, I think it's helpful to look at the Chevy Volt, the Toyota Prius plug-in, the Nissan Leaf, and the Tesla Model S specifically, as these are the vehicles that have accounted for nearly 70% of EV sales in the United States to date. So in these charts, you can see, a really critical distinction is how value retention is measured. There's a bit of a disagreement about this in the market, so we do it both ways. Here you can see how value retention changes when you compare the resale value of the vehicle to the original MSRP versus when you compare it to the MSRP minus incentives, which is, of course, the original cost to consumer. And what's notable here is that, due to the higher government tax credit for BEVs, you can see, models like the Nissan Leaf are really more dependent on subsidies than PHEVs are when it comes to maintaining value retention. And if you look at these charts, you can also see that EVs generally depreciate much more quickly than comparable vehicles in their respective classes. So moving ahead to the next slide, you can see that after only 3 years of use, an average non-luxury EV in the United States is priced well below the average used vehicle. So the Nissan Leaf is cheaper than the average used vehicle in only about 1 year. And only the Tesla Model S is an exception, so it has a used resale price that can be nearly 4 times as high as the average U.S. vehicle in the United States. Now, I think Norway actually provides a really interesting counterexample. So relative to the U.S., used EV prices in this market have been generally better established, and residual values that we've been looking at have been more favorable. So this is due to a number of factors, primarily strong demand from affluent, environmentally conscious consumers, as well as robust government incentives that are not only applied, at the point of purchase, but also throughout the lifetime of the vehicle's usage. And another key factor has been a preference for car ownership and the disinterest in leasing. And the result has been pretty dramatic. So if you look at the Nissan Leaf here, the value retention premium in Norway after 4 to 5 years or 40 to 80,000 miles of use can be close to 20% on average. And, that's a really large amount for your typical consumer. So just moving ahead to the next slide, I do think it's also important to note that there are outliers. So in the United States, the Tesla Model S performs really strongly in its class. So it retains value better, not only than non-luxury EVs, but also competing ICEs, even after 3 years of ownership. And this is relatively surprising because most luxury vehicles in the United States depreciate really steeply after just 1 year. And we think that there are a number of reasons behind this. So Tesla definitely stands out, not only because it has an above average driving range on most models, but, the brand is associated with, luxury appeal, there's attractive styling, there's free access to charging in some cases, and you also have the availability of over-the-air performance updates, which is really not something that other automakers have been able to integrate into their EVs. So just to move on to the next slide, I'll just wrap this up relatively quickly before passing it on to my colleague. So, used or secondhand EV sales have been really small across the world, but a few conclusions I think are relatively clear. So first, while the market is relatively nascent, it's definitely set to grow dramatically, not only in the United States, but particularly in markets like China. And we think this was going to allow, a new segment of car buyers to consider EVs. Secondly, while residual values are low, some EVs certainly perform better than others. So, we're looking at PHEVs, luxury EVs, and most EVs in Norway are currently standing at the top of the pack. And then finally, you have this situation where vehicles and not just EVs are changing. So in the short term, the introduction of new battery electric models is probably going to hurt the value retention of existing EVs. But over the long term, we're going to see EV residual values converging with those of ICEs. As consumers become more familiar with the technology, automakers offer more attractive prices, and governments really step up action in terms of bolstering access to public charging and offering more robust incentives for different segments of the market. So with that, I will pass on the mic to my colleague Yayoi.
Great. Thank you, Nick. That was fascinating. And I think we're going to change gears a little bit to talk more specifically about one component of the EV, which are the batteries, and what happens to the batteries once they leave the cars, and what are the opportunities to actually repurpose these batteries for secondary applications. So I'm Yayoi Sekini. I'm one of the energy storage analysts here at BNEF. This portion of what we cover is really interesting because it's a very new market, nascent market. And so what I'll be presenting on is what is the actual cost of these batteries, of repurposed batteries for stationary storage applications. What is the supply? What does the demand look like on the stationary storage market side? And lastly, sort of what are the challenges and opportunities for investing in the sector? And so let's move on to the next slide, setting up sort of what are the costs. Next one, please. So here what you see is the green triangles are representative of our historical battery prices for lithium-ion batteries. It's partly what Nick presented earlier. And essentially what we've seen, as Nick said, was a 73% decline in prices for lithium-ion batteries for EVs in the last 7 years. And when you see there as well as this dotted line, which is where we expect battery prices to go in the coming decades, using what we call a learning rate of 19%. So every time there's a doubling in manufacturing or in the demand for these batteries, there's a 19% decrease in prices. And so somewhere in the 2020s, we actually expect the batteries to reach sub $100 per kilowatt hour for new batteries. And this is for new batteries. And I'll show why this is important to consider when you're talking about second life batteries in just a minute. So if we move on to the next slide, talking about costs, how much it actually costs to repurpose these batteries, and considering that today there isn't a robust value chain for repurposing. But what you see there are two charts. The one to the left shows repurposing a PHEV battery, the one to the right, a BEV battery. The total cost for each one is slightly different especially because of the weight. So BEV battery is bigger, it costs more to transport, and therefore becomes more expensive if you look at the bar height comparing both charts. But the unit cost is actually lower for a BEV battery because you end up having more kilowatt hours to divide the total cost of the repurposing. And this is looking at a 2018 scenario, making some assumptions on the manufacturing process of repurposing these batteries, and assuming between 100 to 150 megawatt hours of repurposing. And of course, that's a small sort of volume, but it's bigger than what there is out there today. So keep this number in mind, $50 per kilowatt hour in terms of the cost to repurpose, considering some volumes. So move on to the next slide. When we actually compare this cost to the actual price, so we're looking here at the sort of the dotted sort of prism-like shape in the bottom. We've actually observed in terms of the prices for repurposed batteries from anecdotal sort of information from the market or understanding of where the market is today. These batteries cost today above $150 to around $200 per kilowatt hour for these repurposed batteries for other applications. So this considers how much it actually costs to repurpose. The volumes are pretty low. What's probably interesting is that with time, we do expect that to come down. And where it's most interesting is where we expect there to be a convergence of the prices of used batteries with new batteries. And so there's this window of time where somewhere in the 2020s, probably new batteries are going to cost less than actually repurposing second life batteries, which is a challenge, but it is also an opportunity because we're thinking about new applications for used batteries. And so this is cost. I think we can move on to the next slide. What does the supply actually look like? So what are the numbers of batteries that are actually going to be coming out of cars? So we can move on to the next slide. So what you see here are, well, the gray bars show the annual capacity of batteries leaving electric cars between now through to 2025. And we expect in 2025 around 29 gigawatt hours of batteries to be leaving vehicles, and this makes assumptions on how many miles these vehicles are running by the time they leave the cars. Several assumptions. Cumulatively, if you look just at the green line there, we expect 95 gigawatt hours of batteries to have left electric vehicles by 2025. So that's a considerable amount, considering that the market today is sort of growing. We're going to expect more and more batteries to come out of vehicles after that period, certainly. But actually, not all these batteries are fit for secondary applications. They probably haven't been designed with secondary applications in mind. Their capacity has degraded. So the next slide actually shows what would be our assumed cumulative capacity of batteries that could actually be used for secondary applications. And so what this line shows is, comparative to the green line, is, well, around a quarter of these batteries or a third of these batteries could actually be used for secondary applications. It considers that around 70% of the battery capacity, the original battery capacity, has actually degraded because it hasn't been used. And it also considers a changing dynamic over time, which is today maybe a tenth of the batteries can be repurposed into a secondary application. But with time, as automakers may be considering secondary life as an opportunity, they will be repackaging or designing their battery at first use with a secondary use in mind. And so that's also the dynamic that we were considering this. And just keep one number in mind, the 16 gigawatt hours in 2024. I'll tell you in a minute why that number is important, but just to consider that by 2024, around 16 gigawatt hours of batteries will have left and would be repurposeful for secondary applications. So let's move on to the next slide. Talking about demand, and move on to just one more slide, which is, this is showing our house view on where we expect the stationary storage market to be in 2024 in terms of cumulative capacity. So that's why I was talking about 2024, and I'll bring back that 16 gigawatt hours in just a second. But essentially, we see the market significantly growing in terms of stationary energy storage between 2016 and 2024. That's true across all the major markets that we're following. And so you see quite a big presence of Asia Pacific region, which is those red and orange bars there. Europe, Middle East, and Africa, especially Europe with the green bars there representing a fair share. Americas, which are the blue bars, were representing a little less of a share, but certainly a significant market today for stationary storage. And between 2023 and 2024, around the capacity that we expect from in terms of demand between these 2 years is 16 gigawatt hours of annual installation in 2024. And so when you're relaying it back to that 16 gigawatt hours from the previous chart, we're really seeing that, okay, in 2024 alone, there will be the demand for equivalent to the total used batteries that would be in the market. There's obviously a bigger market between 2016 and 2023 for new batteries or whatever energy storage systems that would be installed in this market. And so let's move on to the next slide. The way we construct this forecast is looking at different applications for which you can build or which you would build energy storage for. That's all these applications, 7 applications from short duration balancing to peaking capacity, renewable energy integration, transmission, distribution level storage, as well as what you probably mainly see in this chart, which is behind the meter storage for PVE and storage. Those pink bars really taking a share, especially after the 2020s. And sort of relaying it back to repurposing batteries, the reason why this is interesting and important as a dynamic is because repurposing a battery for utility scale, large scale application is very different to repurposing a battery for a small residential system. And I'll talk a little bit about what car companies are doing in this space in just a minute, but just to keep this framework in mind. And so moving on to the next portion of the presentation. So why isn't this happening in a massive scale yet? What are the other considerations? What are the challenges? And so to start off, on the next slide, I think essentially there's a bit of a list of challenges of using second life batteries. This is a short list. There's probably many more. But firstly, it's quite important to think about a repurposing tension. So EV companies think about the batteries that are leaving their vehicles in a very different way that stationary storage companies are thinking about batteries for their new systems. And EV companies generally tend to prefer to leave the modules of their packs as much as they can in its original form, whereas storage companies really want the batteries to be designed as best they should be for the application they're developing it for, and which goes into the next point, which is uniformity matters. So stationary storage companies really value uniformity, and part of that is having cells that have a similar capacity being packaged together, and it's something that you might not have if you don't have a lot of volumes of used batteries coming out of vehicles. And we expect this to be less of an issue if there are more volumes coming in, because then you can sort of mix and match the different capacities of different cells and put them together to make a system. But at the moment, because the market is very small, it's still an issue. And then on the third point, lifetime matters. So in this case, if you're thinking about the fact that these batteries are leaving the vehicles after 8, maybe 10 years of usage, who is going to provide the warranties for these batteries? And sometimes the systems that are being developed for stationary storage applications require more than 10 years of new life or sort of the new life in the stationary storage form. And that's certainly true for some of the utility contracts or utility projects that are being developed. There may be more leniency in the residential side, but then you have to think about, again, repackaging it in a smaller form for residential usage. And then the last point is certainly really, really important, which is this a liability or is this an opportunity? And certainly from a car company's perspective, you're certainly afraid of what's going to happen to the batteries. If something goes wrong, you don't want your company to be liable to for whatever happened to that battery because it was used in forms that you didn't anticipate. But there's also another layer, which is this might as well be an opportunity for you to find second value for the batteries that you wouldn't otherwise. And so that's something that we're looking at and we're assessing, which comes together, if we move on to the next slide, in another context, which is what is the actual value of recycling these batteries? And today, for context, recycling lithium-ion batteries is a cost. It is not. It doesn't really return you the value that you would be able to extract from actually recycling these batteries. This chart shows different processes for recycling. Two processes that we see today, you can extract a little bit more value from the batteries. And then the third bar there is a different technology to extract the value from the batteries where you could get more value from it. It's also more expensive and a newer technology. And so this is something that will change with time as more recycling facilities come online and the process becomes more streamlined. But recycling matters when you're thinking about where you're going to put your batteries after they leave the car. Are you going to recycle them if there's value, or are you going to be repurposing them? And so that goes on to the next slide, which is the value that you can actually extract. So onto, that one. So the value that you can actually extract from recycling the batteries will vary very much according to the metal prices. And so what this graph shows is over time how much these batteries actually, how much you could actually extract from an NMC lithium-ion battery. If you compare its July 2010 prices with July 2016 prices, you'll see a different value. And this plays out not just in the recycling value, but in the actual process of manufacturing the batteries themselves. If nickel prices are very high or cobalt prices are very high, you might actually be changing the chemistry of the batteries themselves to reduce the amount of cobalt exposure or the cobalt content in your batteries. And so there's a bit of circularity there, not something that I'm going to talk about today, but certainly something that we also follow here at BNES. And so I think we're moving on to the sort of the concluding remarks of my portion of the presentation, which is car companies are certainly thinking about this space. We see different approaches from different car companies. Certainly BYD and Tesla are much more on the new battery space across many different segments, utility scale, commercial, industrial, and residential. We have some car companies certainly developing products in the secondary life battery space. So we see Daimler there with their Mercedes products recently announced, and Nissan certainly have done quite a lot of work with the use of repurposed batteries. Renault just announced their residential storage product using used EV car batteries. And so this is a really interesting space where car companies clearly see an opportunity, are trying to derive the value from that, but the answer really isn't completely clear as of today. And so just to place this into context, going on to the next slide, the storage space is really interesting. Obviously, automotive companies need to observe the space, understand the opportunities, and have already moved into this space, certainly. But we can jump onto the next slide, which is, this is quite a diverse space already. There are different players from many different segments already looking at energy storage for a lot of reasons that I didn't even have a chance to discuss here. But just to contextualize that this is a very cool space, a lot is happening, and there is an opportunity and certainly an investment opportunity. But we have to sort of understand the whole landscape that's at play. And with this, I will pause here. I will pass on to Luke Tonishell from NRDC to talk more specifically about EV charging infrastructure, and we'll leave questions for the end of his presentation.
Great, thanks so much, Yoyoy, and thanks everyone for being with us today. I wanted to talk briefly about, why is it that NRDC is focused on this area, and what's been our recent approach to deploying, trying to accelerate the deployment of the infrastructure to effectively increase the deployment of electric vehicles. So while we're making some good success in the initial years, what I'll show you is that there's still a lot to be done, a lot of opportunity ahead of us. So getting back to the why, well, so I think, as many people know, transportation is a huge part of the carbon footprint of the United States. The sector accounts for roughly a third of the emissions, especially when you include the production of the fuel. And when you look deep within the transportation sector itself, about 80% of those emissions within the sector come from on-road vehicles, roughly 60% from light-duty vehicles, so passenger cars. So we spend a lot of effort here at NRDC to advance policies that require the improvement through vehicle efficiency standards of the vehicles, even using combustion engines, but ultimately to meet sort of long-term greenhouse gas targets, we're going to need to largely electrify the transportation fleet. Next slide, please. So when we look at electric vehicles from an emissions perspective, and this is greenhouse gas emissions relative to conventional gasoline-powered vehicles, on a national average basis, electric vehicles emit about half as much. And this is based on a study that NRDC did with the Electric Power Research Institute in 2015. Looking forward, we know that conventional gasoline vehicles are going to be improving in their efficiency because of those standards. But even when we look out to a 2050 timeframe, concurrently with the deployment of electric vehicles, we expect that the power sector providing the electricity to run those vehicles is going to be getting cleaner and cleaner. So we looked at a couple different scenarios within this study, and in both cases, both the base and the lower GHG scenario, we had the electric sector was getting cleaner, and that's leading to a better emissions profile of the electric vehicles themselves. Next slide, please. So as I mentioned, our focus on the infrastructure side has been, how do we deploy it rapidly so that it's not trying to catch up with the market, but instead actually being ahead of the market, because it's going to be one of the factors that, when people think about buying an electric vehicle, then they're going to be thinking about where can I charge it, and if they're having to wait for that charging infrastructure to come, then you run into this chicken and egg problem. Well, we look to electric utilities as a potential great opportunity to advance that infrastructure. Naturally, they're already providing most of the infrastructure. We have electricity everywhere, but there's more that has to be done there in terms of moving towards what's called level 2 or DC fast charging, higher rates of vehicle electricity application. So obviously, electric utilities are a key role in the infrastructure. They can also help address some of the cost issues, in that if they're capturing some of the grid value that comes from implementing a flexible storage resource that is inherent in an electric vehicle battery, then that can be passed on to consumers. And so that could, in fact, be a rebate from an electricity company to a consumer that would help offset the purchase cost of a vehicle. And finally, from an information perspective, what we know is that obviously everybody has a utility company. They get information or have to connect with that utility company. The utilities have great reach into a consumer base, which they can provide information about, not only about the availability of charging infrastructure, but what rate options are best. How do you choose the best charging system for you at home? How do you get it installed? What are the programs that you as an electric vehicle owner could participate in, such as in demand response and things like that? Next slide. So NRDC published a report last year called Driving Out Pollution, and this report focused on sort of laying out a policy roadmap to get the utilities engaged in supporting electric vehicle adoption. So initially, the issues are around making sure that when charging infrastructure is put in, it's not treated as a separate electric power generation plant and doesn't have too much regulation associated with it. So that's an example of some of the barriers that needed to be broken down, and a lot of the public utility commissions around the country have already dealt with that. And then it's making sure that the the electric vehicle charging that's happening is done in a way that doesn't harm the grid, and that there are rate structures offered to consumers such that they're maximizing the benefits of driving on electricity, i.e. getting the lowest rates for that electric vehicle charging relative to gasoline. Moving on beyond that would be making sure that we fill this gap between the amount of infrastructure that's out there and what's needed, and doing it in a way that all potential EV owners, really all the citizens that are driving out there, can have access to charging infrastructure. And then the third would be, how do we do that deep integration with the grid such that we take advantage of the services that are provided by having this flexible resource on the grid, and maximize the tight integration with the grid in a way that will actually help advance renewable energy. Next slide, please. So we like to think about some some easy ways to think about what are the sort of some measures of success, and I put these in the 3 words of speed, scale, and scope. So essentially, just what I talked about is we've got to get a lot of that infrastructure out there. It needs to be widespread and equitable in terms of access, and needs to address that tight integration of the grid to maximize services. Next slide, please. So NRDC worked with Michael J. Bradley and Associates, or MJ Bradley and Associates, to take a look at how do we quantify the benefits that would be derived from utilities getting involved more deeply in the electric vehicle charging. And what we found, and this is an example of the results from a study of the state of Massachusetts. We've also commissioned studies for 4 other northeastern states, and as well as Colorado. We're starting to look at some studies for some of the Midwest states as well. Getting a little bit of feedback there. Okay. So what we found with the result of these studies is that, when there's additional revenue, obviously, that the utilities get from providing charging services, but those additional revenues more than offset any additional costs that they would incur to meet the load. And so with that additional revenue, what they can do is they can forego the costs that they would have otherwise had to put on utility customers to deal with the natural upkeep of the system. And essentially what this means is that over time, meeting the demand for widespread electric vehicle use actually puts downward pressure on rates for all utility customers, not just electric vehicle owners. Next slide, please. So again, I mentioned that we did these studies for a number of states, and we looked at what were those overall benefits to the consumer, as well as the utility customer in general, as well as what are the gas savings associated with the plug-in vehicle owner, and quantified, also monetized the greenhouse gas benefit. And so, you look at a state like Massachusetts, and in a 2050 timeframe, there could be cumulative benefits of over $30 billion. So very sizable. Next slide, please. So this, I'm going to use Massachusetts as an example one more time. And here is really just kind of a reflection of the size of the growth that's needed in EV infrastructure to meet the kinds of goals that have been put forward by the states. So Massachusetts is part of has adopted the zero emission vehicle program. Under that program, they're committed to having 300,000 electric vehicles. So that could be battery electrics and plug-in hybrids on the roads of Massachusetts by the year 2025. So that's that tall green bar. Today, that number is somewhere around 9,000. So a huge amount of increase that needs to happen. When you look at the charging infrastructure, they've only got on the order of 1,000 to 1,200 ports in the state, and this is public ports, public and workplace ports. When we look at really what's needed to meet the demands of this 300,000 vehicles, there's different study. The National Renewable Energy Laboratory did a study for Massachusetts, and they said that they looked at a range of somewhere between 43,000 to 75,000 combination of public and workplace ports that need to be available to meet those 300,000 vehicles. So that's an attachment rate, meaning how many EVs for every port of 7 to 1 or 4 to 1. So obviously a great amount of need there, both from the vehicle and the infrastructure side. Next slide, please. And so Massachusetts, the two main utilities in the state, Eversource and National Grid, have actually put forth proposals that are now being evaluated by the Department of Public Utilities to start moving towards that infrastructure deployment. And a combination of those two proposals would, maybe add another 5,700 chargers. And they've been mostly focused on public and workplace charging. So adding that to maybe 1,000 roughly on this available today in the state, you're at 6,700 charging stations. To get to that, somewhere between 43 and 75,000, you're still talking about, roughly a tenfold increase in the number of charging stations that are needed. So while utilities are starting to recognize what the benefits are here, and they are getting engaged, and we think that that's really great positive movement, these numbers also indicate that there's still going to continue to be a pretty substantial need beyond that. So just in summary of what I've talked about a little bit now, obviously we need electric vehicles to advance rapidly to meet our emissions reduction targets. We see the utilities as key players, and we want the infrastructure to come forward to help drive the market. But obviously we have a really big ramp up to do. And so with my last slide, one more please. So with this last slide, I just thought we started out with a discussion of vehicles that Nick provided, and so just one last point was another area obviously that is important for driving the vehicle sales is incentives. And I just wanted to point out to that, as Nick had pointed to, there are some incentives coming from the automakers today, but there's also a role for the finance institutions to help provide incentives. And this is an example of where a bank has looked at providing, they dropped their loan rates by 0.5% for somebody that's going and purchasing a green vehicle. So this is not necessarily just electric vehicles, but they refer to an EPA standard of what is a cleaner vehicle, and make that part of their loan package. So yet another opportunity for where finance can get engaged. So with that, thanks very much, and I think we'll turn it back to Sarah and look forward to your questions.
Thank you, Nick, Yoyoy, and Luke, for the great presentations, and the audience. This is a great time to start typing in some of your questions. We've already had a couple in, but I always know that this is the moment when I realize I only have a few minutes. So we've got about 10 minutes for questions, and I thought I would start off, since we are the Green Bank Network and financing is a major theme for us, of how can EVs be more widely adopted. And Nick, what do you think are the largest hurdles to financing EVs? I'll ask first, and then Luke, on the infrastructure side, if you have some points from the policy side or policy barriers.
So you wanted me to go ahead and on the policy side, or were you asking for questions?
I was asking two questions, but Luke, if you'll start, that'd be great.
Yeah, sure. I mean, I think that I talked a little bit about some of the barriers with regard to just making sure that charging is treated as something that isn't like a whole new electric plant, and that's something that's being dealt with. But some of the barriers for adoption also have to do with making sure that people have access to rates, so that when they're actually charging, so that charging your vehicle doesn't cost more than driving on gasoline. When we're getting to sort of some of the challenges of actually having, the infrastructure proposals that are being put forth by the utilities, they the utilities haven't, they are asking essentially that they deploy this infrastructure and that they can roll it into the rate base. Well, naturally, that's going to be a broad discussion among the utility stakeholders and utility customer advocates. So what's really important is that people understand that sort of the long-term benefit of what that infrastructure deployment provides, and that it is a beneficial aspect to all consumers. But naturally, when you're having that initial discussion, and even though this has really a tiny impact on rates overall for utility customers in the near term, the long-term benefits are large. But still, the speed at which we need to go is much faster than what we're seeing, with these initial sort of really what are in many cases pilot programs.
Thank you so much. That's very helpful. Nick, what do you view as the largest hurdles to financing EVs?
Sure. So I think actually probably one of the largest challenges to EV uptake is not tied to financing. I think it's more in terms of the cost of batteries and actually consumer preferences. But one of the interesting angles that we've seen recently is that as I mentioned in the presentation, the number of EVs coming off lease over the next few years is going to increase dramatically. And of course, that's not happening in a vacuum. So we're also seeing huge numbers of internal combustion engine vehicles coming off lease. And when you have this number of vehicles flooding the market, and when you pair that with low demand for some of these EVs, you're going to see new leasing rates for most vehicles in the United States probably starting to trend up over the next few years. So that could make some of these vehicles that we discussed in the presentation, a little bit further out of reach to your typical consumer. And so I think that's where policymakers can really play a role. So I mentioned California now has a tax incentive for used electric vehicles. It's really more of a pilot program right now. It's only applied in the Los Angeles area, but it's an amount of up to $6,500 in some cases. And so I think incentives like that could really probably have the most impact.
And interesting you said that our members did have a long conversation about how to figure out what the residual value is as being a major hurdle in some of their financing. So definitely relates to all of that. Thank you very much. For Yayoi, how much will the market for second life batteries impact the used EV market? What are some of the implications for this on the pace of widespread EV adoptions, especially for non-high income prospective consumers?
Hello. Yeah, that's a difficult question, because I guess from the perspective, the way we've looked at used batteries so far has really been the fact that it hasn't really been a major economic opportunity today. It could be in the future, and yet that sort of window of time, whether it will become or not, is still not entirely clear from our perspective. In terms of how it will affect the current market, I think when there is more, well, in basic terms, I guess, when there is more residual value on your batteries, then you might have less fear of actually buying or leasing EVs, because you see in the end of the life that there will be some value that you can extract once you actually resell or even sort of put the vehicle at the end of its life. And so it'll potentially improve, but it's yet to be seen, I guess.
And following on that, you discussed a little bit about secondary applications for EV batteries. What are some of those? Are they more related to, you mentioned the power sector, you've mentioned community, and there's also the utility scale. What are some of the main applications that are being seen in the near term to medium term?
Yeah, I think observing where used EV batteries have already been piloted or even productized in the stationary storage space, and I mainly focus on stationary storage applications. We've seen used EV batteries being used for some C&I projects, so commercial and industrial sites, and repurposing the batteries for sort of demand charge management of buildings, so reducing the peak demand of buildings. These are especially good as like pilot projects because you can easily find a commercial or industrial customer who's willing to reduce their bills by, adding some new concept project. And then in terms of where car companies have been actioning, we've certainly seen residential energy storage products come into the market by Nissan, recently by Renault, really sort of marketing their product to residential customers who maybe have rooftop solar in their houses and want to offset some of their load in the evening using that solar generation, charging the batteries and discharging the batteries in the evening. So we see a couple of applications. I think there's potential for more to be done. But yeah, as I said, it's a new area, and there's certainly a lot that has to be figured out before if it becomes a market.
This is Luke. I'll just add that we have seen, as you pointed to, some of the cases where the used vehicle batteries have been looked at as an opportunity to really help at certain nodes of the grid, so they can avoid other infrastructure upgrades in those nodes that are needed in certain like peak applications. And so, for example, there's a pilot going on, or that maybe has finished up now in California, where BMW had used a bank of used batteries that were deployed in a node within a utility network, and they were actually paying BMW EV owners a fee or not a fee, an opportunity, basically paying them to participate in a program where they could manage their charging, and it's not that they were sending energy back from their vehicles into the grid, but just turning charging off at certain times. And if they couldn't meet all the requirements of the demand response, then they could supply it or deal with those local issues with that bank of secondary use batteries.
Thank you. Very, very helpful. We've had a couple of questions that divert a little bit from EVs to the idea of autonomous vehicles as well as greater shared mobility, shared vehicle ownership, and how this will affect the EV market in terms of depreciation, the life, because, for example, if one car is used many more hours in the day, it would have more miles, and this would lead to quickly depreciating the vehicle's life, but at the same time, that will change the way that ownership is done. Is there anyone that wants to take this that has a little more interest?
Hi, Sarah. I'll try to be quick and bring it back to the perspective that I was bringing in the presentation, which is, I think, a good case example of thinking about autonomous vehicles, and especially higher utilization rate of the vehicles, is the fact that maybe the batteries coming out of vehicles are coming out much sooner than we expected. And so instead of looking at a 10-year lifetime, we're looking at batteries degraded at 80% at, say, year 4 or 5. And so that means that there might be a much more dynamic secondary life battery market. That's something that's sort of yet to be seen as and when this market develops. But that's certainly an interesting area that we're looking into.
Well, thank you so much. We've actually reached our time. That was perfect timing, not planned quite that way, but it worked out wonderfully. Sorry for some of the background noise. There was a surprise party that obviously surprised as well for the background of the audio, but we appreciate all of you sticking through with it. Thank you, Nick, Yayoi, and Luke, for your great presentations, and for the audience for your questions. If you have any other questions, please feel free to contact us at info@greenbanknetwork.org, which you see on your screen. And you're welcome to sign up for our newsletter on the website as well, so that you hear more about these Green Bank events in the future. On behalf of the Green Bank Network, thank you for joining us today, and have a great rest of your day.